Welcome to Financial Market Insights for Traders, where we bring you deep insights into the financial markets, investment strategies, and economic trends that shape our world. I'm Sophia, and today we're talking about one of the most closely watched assets in the world, gold. Gold has been a trusted store of value for centuries, a hedge against inflation, and a go-to safe haven asset during times of economic uncertainty. But as we move into 2025, traders, investors, and analysts are asking the big question: will gold prices continue their upward momentum, or are we looking at a correction? Let's break it down. What happened in 2024? What's driving gold's trajectory in 2025? And what different scenarios could unfold for the precious metal in the months ahead? Gold's performance in 2024, a year of record highs. Gold had an exceptional run in 2024, hitting record highs and proving its value once again as a safe haven asset. By the end of the year, gold was trading at around $2,950 per ounce, marking a strong bull market fueled by several key factors. Geopolitical uncertainty, ongoing conflicts, particularly in Eastern Europe and the Middle East, created a climate of risk aversion, pushing investors toward gold. Inflationary pressures, despite central bank efforts to curb inflation, rising prices in major economies made gold a preferred hedge against currency devaluation. Central bank demand, countries like China, India, and Russia ramped up their gold purchases to diversify away from the US dollar. Interest rate expectations, speculation about the Federal Reserve cutting rates in late 2024 fueled further interest in gold, as lower interest rates reduced the opportunity cost of holding a non-yielding asset like gold. So, we entered 2025 with gold in a strong position. But the question remains, what's next? Gold price predictions for 2025. What are analysts saying? Financial institutions and market experts have shared their forecasts for gold in 2025, and many are still bullish. Goldman Sachs projects gold could hit $3,100 per ounce by year-end, citing continued central bank demand and economic uncertainty. UBS has a more aggressive forecast, suggesting gold could reach $3,200 if inflation remains high and interest rate cuts materialize. Investing Haven believes gold could even surpass $3,275 per ounce this year, with the potential to touch $3,800 by 2026 and $4,400 by 2027. While these forecasts paint a positive picture, some analysts warn that gold could experience short-term pullbacks due to profit-taking or shifts in Federal Reserve policy. Key factors influencing gold prices in 2025. What will ultimately determine whether gold continues to rise or faces resistance? Here are the major forces at play. 1. Federal Reserve policy and interest rates. The Federal Reserve plays a crucial role in gold's price direction. If the Fed cuts interest rates in 2025, gold prices could rise further. Lower rates typically weaken the US dollar, making gold more attractive to international buyers. On the flip side, if the Fed remains hawkish and keeps rates high to fight inflation, we could see downward pressure on gold as investors favor yield-bearing assets over non-yielding ones like gold. 2. Inflation and economic growth. Despite previous rate hikes, inflation is still a major concern. If it remains stubbornly high, gold's status as an inflation hedge will continue to attract investors. But if inflation suddenly drops below expectations, gold's appeal could diminish. Economic growth is another factor. If we see a slowdown or even a recession, gold will likely rally as investors move away from equities and riskier assets. 3. Geopolitical tensions. Geopolitical uncertainty remains a wild card in 2025. Several hotspots could impact gold prices. Russia-Ukraine conflict. Continued tensions could drive further demand for gold. U.S.-China relations. Trade wars and disputes over Taiwan could lead to market instability. Middle East volatility. Any escalation in conflicts could trigger safe haven buying. If geopolitical risks escalate, expect gold prices to spike as investors seek protection. 4. Central bank gold purchases. Central banks are continuing to stockpile gold, reducing their reliance on the US dollar. China, India, and Russia have been leading this charge, and their purchases could be a key driver of gold's upward momentum in 2025. Goldman Sachs estimates that for every 100 tons of gold purchased by central banks, prices rise by 2.4%, a significant impact if this trend continues. 5. U.S. dollar strength. Gold and the U.S. dollar share an inverse relationship. When the dollar weakens, gold tends to rise. If the Fed adopts a dovish stance and the dollar declines, we could see another gold rally. However, if the U.S. economy remains strong and the dollar holds firm, gold may face headwinds. Potential scenarios for gold in 2025. Let's consider three possible scenarios for gold this year. 1. The bullish case. Gold breaks $3,500 per ounce. Inflation remains high. The Fed cuts rates aggressively. Geopolitical risks escalate. Central bank demand remains strong. If all these factors align, gold could push beyond $3,500 per ounce. 2. The neutral case. Gold stabilizes between $2,900 to $3,200. Inflation moderates. The Fed cuts rates slowly. Geopolitical risks remain contained. Central bank demand supports prices. In this scenario, gold moves within a tight range, with neither a major rally nor a sharp decline. 3. The bearish case. Gold falls below $2,800. Inflation falls rapidly. The Fed keeps rates high. Geopolitical tensions ease. The U.S. dollar strengthens. While a major downturn is unlikely, these conditions could lead to a gold pullback. Trading gold in 2025. CFDs and investment strategies. For those looking to capitalize on gold's price movements, trading gold CFDs, contracts for difference, offers a flexible alternative to physical gold. Benefits of gold CFD trading. Leverage allows traders to maximize gains. Ability to profit from both rising and falling prices. No need for physical storage. For those interested in trading gold CFDs, Crystal Ball Markets provides a reliable platform with competitive spreads and advanced tools. Final thoughts. Will gold shine in 2025? Gold's long-term outlook remains strong. While short-term fluctuations are inevitable, the combination of geopolitical uncertainty, central bank demand, and inflation concerns suggest that gold could maintain its upward trajectory. Investors should stay informed, diversify portfolios, and consider gold CFDs as a flexible trading option to navigate market movements. For expert insights and gold CFD trading opportunities, check out crystalballmarkets.com. That's all for today's episode. If you enjoyed this discussion, don't forget to subscribe, leave a review, and share this podcast with fellow traders and investors.